Hi, I'm Gina Corso. I'm a real estate agent with the Erica and Tiffany Real Estate Group with Compass in Calabasas, and I'm here today with the amazing Paul Cawthorn. He's my preferred lender, and he's with Homebridge Financial. He's been in the mortgage lending industry for 16 years, since 2003, right?
Right.
Okay. And today we're going to talk about pre-approval versus pre-qualification and what goes into that process. So, Paul, tell me a little bit about the difference, because we always hear these terms mixed up, used interchangeably. What's the difference between getting pre-approved and pre-qualified?
Okay. So, getting pre-approved is simply having a conversation with a mortgage lender. Okay.
Okay.
You're discussing your income, your savings, how much of a loan you need, and the lender is saying essentially, well, based on our conversation, you'll qualify to borrow X amount.
Got it. So it's more general.
It is. It's a very high level view. It's just a conversation.
Okay.
A pre-approval, on the other hand, the mortgage lender will review your financial documents, pay stubs, W-2s, bank statements,
Sure.
and they'll know exactly how much you earn and how much savings you have, and they'll be able to give you a definitive answer on exactly what you qualify to borrow.
Okay.
Okay?
Got it. So I get this all the time, and I'm sure maybe if you're watching, you have the same thought. It's like people want to get out there, they want to go shopping. They don't want to do the paperwork part. You know, they want to get pre-approved when they're ready to buy, not necessarily before they start
Right.
shopping. So what's your recommendation with getting pre-approved?
Well,
when should you do it?
Yeah, I mean, the first thing I would say is if you're working with a buyer who wants to make offers before they're pre-approved, they have to understand that when they find the right house, that's probably going to be the right house for numerous other buyers. And you have to move quickly. You have to get an offer together, you have to submit it, and you've got to start the negotiation process. That's what you do.
Absolutely.
If your pre-approval is not in place, then you won't be able to get the offer in. You'll be stuck getting pre-approved when everybody else is getting offers in, and you're going to lose the house. There's no question. So in order to just be timely and be able to move quickly, you have to get pre-approved before you start shopping.
Got it. Okay. And, I've definitely seen that with my clients. It's, we want to put in a really strong offer. We want to attach the pre-approval letter from a lender with the offer saying, like, this client is ready to go. They have the funds. They can perform. And in a market like right now, where we still are seeing multiple offers and things going over asking price, the pre-approval is so crucial. So can you talk a little bit about like what that process looks like? I know sometimes it can be hard for people to open up and talk about the personal finances with someone they may not know.
Right.
So
Gotcha.
what is like, when I send my clients to you, what's like the first thing that you do?
Well, okay, so I always like to have an initial consultation,
Okay.
which is essentially a pre-qualification.
Got it.
We'll discuss what the goals are, what type of a property do they want to purchase, how much are they comfortable spending monthly to live in this property,
Okay.
how much money do they have available for down payment and closing costs. And once I have that information, it allows me to then form a picture and present them with numbers that say, okay, well, based on those goals, here's the purchase price you'll be looking at, here's the monthly housing cost, here's how much it'll all cost.
Right.
And them being able to subsequently visualize that and look at that is like an aha moment, right? Like, oh wow, okay, so now now they have a tangible goal in mind for themselves as well.
Got it. So one thing that I hear from a lot of my clients is like, I don't want to get pre-approved right now because they're nervous that they're going to take a hit to their credit, and they're like, if I'm not ready to buy right now, why do that? So can you speak to that? Like, how does it affect an individual's credit score?
That's a great question, and everybody asks that question.
Okay.
So first of all, there are hard inquiries and soft inquiries with the credit bureaus.
Right.
When you have your credit ordered by a mortgage company, it is considered a hard inquiry.
Okay.
It's not soft, and it will show up on the credit report.
Got it.
Okay. However, a hard inquiry does not necessarily automatically lower your credit score. Okay.
Okay.
There is a logarithm that the credit bureaus use to calculate credit scores. It's called Fair Isaac. You've probably heard of it.
Yeah.
Fair Isaac Corporation is the full name for FICO, or FICO score
FICO
or
score.
credit score.
Got it.
Okay. So, and the reason I bring that up is that the logarithm, the calculation that's used, is essentially looking mostly at, have you made timely payments? How much debt do you have relative to your limit, right? And then at the bottom of the logarithm totem pole, so to speak, is how many inquiries have you had?
Got it.
Okay.
So there's many different factors that go into the credit score.
Absolutely.
One hard or soft inquiry isn't the whole thing.
Correct.
Got it.
Okay, so, and furthermore, what the credit bureaus do is they give borrowers a 21-day window in which they can have their credit ordered at multiple mortgage lenders without, and definitely they won't have a dip in their score. Okay? That means that the borrower can now shop, and it would be punitive, it'd be overly punitive to make it so that every single score reduces, or every single inquiry reduces your score. That's simply not the case. Okay. However, that said, if I order someone's credit in, let's say, April, and then it's August down the road, August, September, they several months go by, they don't make a purchase, and I have to reorder it, there is a possibility that their score may come down 3-4 points based on a second inquiry. But typically no. Okay.
And so let's say I send someone over to you, they understand all this, they're ready to go. What paperwork needs to happen to do a pre-approval? Like, how long does it take, and what do you need from people?
So after the pre-qualification consultation, I will send an email recapping our conversation, giving them the numbers so they can see them for whatever housing costs we've discussed, and then I'll give an outline of the steps we take for the pre-approval.
Got it.
Essentially what I'm collecting are pay stubs, W-2s, tax returns, bank statements.
Going back how far?
Well, the tax returns are the last 2 years, along with W-2s. Pay stubs for the last 30 days. And 2 months bank statements. Okay. Now, based on that initial review, or based on my conversation with the borrower, I may need more or less. If they have their own business, I'll need business tax returns, for instance, K-1s, that kind of thing. But it's not too invasive. I'll give a list so they don't have to remember anything from the conversation. And once they send it to me, I will complete the review within 24 hours.
Got it.
Typically the same day. If there's something that's a little quirky with their pre-approval, then I will speak to an underwriter directly before I issue the pre-approval and make sure that I've addressed any future roadblocks or hiccups we might encounter.
Got it.
That's when it would take a full 24 hours. Otherwise, it's the same day.
So, any final thoughts on why people should get pre-approved prior to going out and shopping with a real estate agent?
Well, they have to know their budget. They have to know, I mean, they have to know, how much do they qualify to borrow, and then subsequently, what will their purchase price be?
Absolutely.
If they don't have that, you're spinning your wheels, essentially, right?
Absolutely. There's nothing worse than thinking you can qualify for a certain amount, going out with your agent and seeing a bunch of houses that are, not in your reach right now. Because once you readjust your budget and you start looking at different homes, you're just going to remember the houses that you saw the first time. You're going to spend a lot of time looking at places that you really can't qualify for. Alternatively, you might be able to afford more than you think you can, and you're spending a bunch of time and wasting time looking at homes where you could do better. So yeah, I totally agree. It's super important to get the pre-approval prior to going out shopping. It's like going out shopping without, knowing what's in your bank account. So is there anything else that you want to add to this conversation?
The only thing that I would add is that getting pre-approved will address any hiccups that may be encountered down the road.
Got it.
If there's an issue with the credit, getting pre-approved at the beginning gives us time to fix it. You can fix credit problems. You don't have to just accept them.
How do you do that? Can you talk just for a minute on how would you fix a credit issue?
Well, that's actually, although I am not a quote-unquote credit repair person.
Got it.
But just to give, from a high level, if somebody has late payments that a creditor is reporting on the credit report, if the creditor is reporting those erroneously, and there could be any number of reasons. You moved and you got a bill at the old address and they never forwarded it to the new address.
Got it.
There are some instances in which you can just request the creditor delete that negative reporting or late payment, and they will.
Got it. And then it'll adjust.
And then your credit score, I mean,
hopefully.
Just to, as an idea, your credit score, if you could have an 800 credit score, and if you have one 30-day late payment, your credit score will drop roughly 100 points.
Wow.
So if you're 750, 740, which is roughly average, one late payment, and now you're down in 640 range, 650 range, and your loan options have shrunk considerably. You don't have to just accept that your credit is a bad score. You can work on it, and that's something that I discuss.
But again, meeting with you prior to going shopping, you can find this stuff ahead of time. So before you get all psyched and pumped and want to go shopping, if you have a way to figure out what the issues are with your credit, maybe you can meet with a credit repair professional and get that straightened out. And then,
and just to add to that, just making sure that your income is sufficient to qualify for the home loan. If you're working with a lender who's glossing over these issues, who's just having a conversation about, oh, how much do you earn? Oh, great. And how much? Okay, great. Here you go. Go ahead. You can then get into escrow for a purchase and find out, oh, wait, no, we don't have enough income to qualify for this loan. You're now having a prototypical terrible transaction, a gut-wrenching, everybody says getting a mortgage is a nightmare. It really isn't. It's not necessarily the most fun you ever had, but it can be pleasant with the right person and making sure that everything works as it should and you take the right steps.
Well, so here's a question I have for you then. I send all my clients to Paul, but if you're watching this video and you're trying to figure out like who to work with or how to pick the best lender, do you have any recommendations on like what questions, how do we vet lenders? Like what makes you great and why should people work with you?
The first thing I would say is that I'm a direct lender.
Okay.
That means that the company I work for, we have our own underwriting operations, our own treasury operations for funding loans. I have total control. I'm not brokering a loan to a third party, another lender, where I don't necessarily know who the underwriter is. You know what I mean? I can move quickly. Everybody's accountable to me, essentially, right? And then the huge difference between someone like myself, I'm like a private mortgage banker. The company I work for, Homebridge Financial Services, is just a private lender. It's all we do. We do mortgages. If you're with a bank, Chase, Bank of America, Wells Fargo, you'll see that essentially most of the time you go into the branch and you ask someone a question and it's somebody who may or may not know anything about it, and they really just want to give you, they'll say, okay, here's the loan for you. They won't give you what your options are and educate you as to, here's this great loan that works exactly for you based on your goals,
Because they're also beholden to what their bank products it can offer.
Well, there's that also, but just to go back to that for just 1 second, people who work at banks typically don't have a ton of experience. That's not always true, but a lot of times you'll get someone who just doesn't know a lot.
Right.
So they're not able to give you a lot of detail.
Got it.
And then with regard to the loan programs, I'm going to have a lot more loan programs than typically the big banks will.
Okay.
Because the mortgage company is, again, that's all we do.
Right.
So we're making sure that, we can address, have a full suite of mortgage programs and address all of our borrowers' needs.
Awesome. All right. Well, thank you guys so much for tuning in, watching this video. I hope it was super informative for you. Again, my name is Gina Corso. I'm a real estate agent with the Erica and Tiffany team of Compass in Calabasas. This is Paul Cawthorn. Thank you so much again for coming out, and thank you so much for tuning in.